And a very good morning. It's Mark here. It is going on 8:30 Eastern, which would be 1:30 GMT. Welcome to the first full trading week of 2025. It looks like we're picking up where we left off. US dollar again, front and center stage, but especially following Friday's non-farm payroll release. Strong numbers, US dollar gaining across the board. And what's come out of that is it seems the market has scaled back on rate cut expectations for next year. Possibly, I've read even only one rate cut next year, all very US dollar positive at this point. This week, the focus is going to be on inflation. We've got CPI numbers coming out on Wednesday. Should there be a hot report, of course, stock market will be very vulnerable. If the report is a little softer, that could trigger or set off a trigger for bonds, risk assets like stocks, Bitcoin, and that would be negative for US dollar. So we'll be certain to watch out for that on Wednesday. Let's look at where we stand today. There you can see strong US dollar again. Having said that, it has tested that 110 level, but you can see a little wick there. Let me just go to the hourly, and there you can see small retracement on the hourly at this point, sitting at 109.71. And bearing in mind that the US session has just got started, as we've seen so many times over the past few weeks, we see a trend during the Asian, particularly European session, and then that gets reversed when the US session gets underway. Let's watch and see if the US dollar can continue its pre-existing uptrend rally testing 110, or do we maybe see some kind of a turnaround? We'll watch the shorter time frames and look for trading opportunities. It is an hour until the stock markets get going, until Wall Street opens. So pre-market conditions are seeing a continuation of the sell-off in the S&P, support at 5,808. Significant. This move is strong, but again, markets haven't opened yet. Let's see when the markets open in an hour, if we have continued sell-off or if there's some kind of a bounce maybe, and an inverse relationship. The inverse relationship has been strong with US dollar and equities. As you can see, it's a downtrend, strong downtrend. Sellers in control. Let's see how things work out this week, and that's we'll see more of that when the markets get going in an hour. Commodities, interesting. Gold, which had rallied along with the US dollar. We've had strong US dollar, strong gold. The traditional inverse relationship would have been strong US dollar, weak gold. That hasn't happened. But today we are seeing a sell-off. Whether this is a reversal, short-term intraday retracement, some profit taking, but we can see technically that price action has now come below the top of the triangle, looking to take out. It has taken out. Let's see if it can maintain yesterday's low. That would give us no longer higher lows. That would change things technically. But again, let's see how that, now that the US session is underway, we'll keep an eye on gold and see if buyers will step in at these levels around this area, around the 2,668, where it has stepped in before. Will buyers step in again here and bring price action back up to test 2,700, or continue down here and look for these lower levels around the 2,600, 2,500 mark. Let's look at Brent oil. Very, very strong. Wow. Interesting. So after the market closed on Friday, we had a big gap up to start the new week from 79.66 close and an open. That would be the top of this red candlestick. 81.21 was the open to start the new week. giving up a little bit, to be expected. However, when there is a gap up, I always see that as a precursor for what's to come. So the fact that it gapped up the way it did, maybe some profit taking, maybe some adjusting now, but buyers will certainly look to bounce off this current level right here at the 80.77, come back and test 81 and look to the highs that we saw earlier in this session. Strong oil, very strong. Let's have a look at Bitcoin. Wow, Bitcoin, this strong sell-off which we saw last week continuing. Look how low this is, 90,133. That's really significant. That's below the 91,000. It's tested. Sellers have tested this level since late last year, unable to maintain and follow through. There's the break, 89,974. That's below 90,000. As I say, I feel that is significant, certainly from a technical standpoint. Let's see if sellers can continue that move, or if buyers step in like they've done so often since November last year and around this area, even though it went that little bit lower and tested lower. Let's see if the buyers do step in, if there's demand at this 90 to 91,000 level, and buyers can come in and look again to get back up to that 95,000 mark. Good trading, guys. See you at the end of day market commentary.